The Fed has raised its key interest rate yet again to the highest level in 16 years. While this is a strategy to counter inflation, some fear the increasing interest rates are doing more harm than good to the economy. Eyewitness News reporter Carlos Granda joins us now with details. Carlos.
Well, Giovanna, this was expected. The Federal Reserve raising its benchmark interest rate again, this time a quarter point, putting it above 5% for the first time since 2006. Now, the Fed is working to bring down stubborn inflation, but doing this is risky. Some are worried about a recession and financial stability with an ongoing crisis in the banking sector. It's a delicate balance for the Fed. Inflation is still a big problem. It stands at an annual rate of 5%. All of us are paying higher prices for food, clothing, gasoline, and more.
Inflation has moderated somewhat since the middle of last year. Nonetheless, inflation pressures continue to run high, and the process of getting inflation back down to 2% has a long way to go.
I do think that the Fed's main goal is to tame inflation, and unfortunately, that is a battle we have not won yet.
And what will higher interest rates mean? Well, you will be paying higher rates on your credit cards, mortgages, and auto loans.
Interest rates on recreational vehicles like these are not like they are for automobiles. So instead of paying in the 2s and 3%, they're going to pay in the 7 or 8%.
At Thousand Oaks Motorsports, they say they're already feeling the impact of these higher rates. People sometimes buy motorcycles to save on gas, but now will have to pay more for their loan.
Banks are trying to do their best to help out, but it does make it a higher cost for affordability. So, I mean, where someone might be paying normally a $200 a month payment, now they're paying $250 a month. So yeah, it does eat into their budget.
The consequences of higher borrowing costs have started to show. The unemployment rate is at 3.5% in the U.S. in March. Layoffs jumped to 1.8 million. That's the highest since December of 2020.
Many people are worried about the next recession, but I'd be less worried about economic things and more worried about Wall Street and your actual investment portfolios and retirement portfolios, especially for retirees out there that depend on this money.
And the big question is what happens next? The Fed statement indicates this could be the last increase. Some believe the Fed will now wait and see what happens over the next few months. And if the economy appears to be in trouble, rates could even be lowered late this year. I'm Carlos Granda, ABC 7 Eyewitness News. Back to you.